2 of the Rebel Finance podcast. Today I got Pat Neville back. We also got Jeremy Vreeland, who was out sick last week. Next week we're having a guest, Frances Stacy. She couldn't join us today, but she's going to be really good. Looking forward to that. So so going through our list, obviously the 800-pound gorilla right now is NVIDIA earnings. Beats all across the board. I mean, insane revenue, all that stuff. Stock went all over the place, and now chart. Yeah, I mean, now it's trying to hold the 200-day moving average. So really, what kind of, in my mind, what this goes to show, last week I was talking a lot about the Magnificent Seven, and how maybe they're overvalued, but maybe they're not, because they can morph into so many different areas, different things, quantum, AI, robots, all that stuff. I am worried, at least in the short term. What NVIDIA showed is that it is so big now that even insane earnings is not enough to get this thing moving. And, and I think kind of what we've seen in all of these AI stocks is a bubble that's been looking for a pin. And I think last week or the week before, whenever the rumor was kicking around about Microsoft, ramping down CapEx, and then the COVID rumor came out. Yeah, I think that was enough to kind of suck the oxygen out. What are you guys thinking, looking at NVIDIA here?
Go ahead, Jim.
I'm thinking, and you're right, the whole market seemed to be kind of holding its breath, waiting to see what NVIDIA was going to do. And it's interesting that they, like you said, came out with killer data, and it wasn't enough to really move the needle. Ordinarily, an earnings call that stays flat like that, we would call it kind of a nothing burger. Or sometimes, like when Jay Powell would come to the podium and say nothing, call it a nothing burger the same way. But this was kind of it wasn't a nothing burger. It was an almost nothing burger. It didn't really get anything across to really produce any trends. And if you look across, like even QQQ, I mean, we were bearish today, just a pullback to test liquidity, it looks like to me. But we're mostly kind of sitting on our hands and waiting for this earnings call, and then it happens, and then now we still are found, just sitting on our hands. And some people ended up holding some bags, trying to chase it, obviously. But it's really interesting that we don't have anything to really do until this starts to follow through somewhere. And a lot of the swing trade setups on other charts, other equities, are kind of in the same holding pattern.
So interesting point. Here's what I'm doing, and curious to get your feedback on it. So, obviously heat formula, hedges. So, I've got hedges. I added to my ARK hedges today because ARK was up. Whenever ARK's up, I like to do something. I sold some calls on it. I have puts on it. One of my favorite hedges. What I'm doing on the long side is I'm selling cash covered puts. I don't normally do that a lot. I love asymmetry. And, so if I think, and I don't have them on NVIDIA, but yeah, I do have them on Google. So, normally if I think, hey, Google is going to go up and retest 205, I'll just buy a call. I'll have it somewhere around the money, and, then my risk is what's in my call, and my upside is virtually unlimited. Times like these, I'm not seeing it. I don't think Google is going to be retesting 205 anytime soon, but I also don't think they're going to retest 150. So what I'm doing is I'm looking, stocks I want to be long, I'm looking at those key areas, putting my put below, And then worst case, I get executed, and then I'll probably just sell a call. I know you're an option selling guy. What do you think of that?
So for me, I'm still sticking to mainly TNA. For
Which
looking
for
at Google,
everyone involved is 3x small cap long.
right? It's rough right now. I'm underwater, but I'm not all the way underwater because my running total is nowhere near where price is right now. It's way below it. But ideally, if I'm going to sell a covered put, it's because I want to own the company or the ETF anyway. And then my goals are also to go and later sell covered calls on it. So what I did do is I went and sold I sold the 11 strike NVDX cash secured put this morning. I'll have to look at the expiration, but I got 95 cents for it right off the bat. And I'm expecting to be assigned on that probably overnight. Even though it doesn't expire for 2 weeks, it's very likely that the NVDX will close in the money on that strike, and I'll be assigned instantly. So then what that means for me is now instead of waiting, days and sometimes weeks to collect all that premium, I get it instantly. So my cost basis is offset by that premium. So my cost basis would be 10.05 on an 11 strike assignment. So in a sense, when you're looking at companies to sell puts on, you're looking to get paid to wait, quite literally. And the idea is if you're doing something like that with Google or Microsoft or what have you, it really makes a lot of sense as an investor to learn how to do that, because not only do you get paid to wait, but if things happen very suddenly, if you sold an at the money strike or even an out of the money strike that became in the money, now you get all that premium right now, and it offsets your cost basis.
One key point you just made there is Microsoft, Google. So I would not be selling cash covered puts on, no profit,
Right.
shit goes.
Right.
So,
yeah. Don't pull that off.
So, I also went back into Oklo yesterday. I'm not doing a cash secured put on Oklo. For those who don't know, that's a nuclear stock that doesn't make any money, probably won't make any money for 20 years. But when it moves. But that could go to zero. Let's pause. Pat, any thoughts on NVIDIA here?
Well, mine are a little longer and deeper. That's why I was letting you guys go. So I'm gonna take the stage here for a few moments, right?
Sure.
All right. So
we'll interrupt you if you start getting too boring.
Okay. So I felt like the same way, Jeremy did, that, NVIDIA earnings were a nothing burger, kind of moved on almost immediately. Like they were up, but what do you have to say is, their revenue was up over 80%. So really can't call it a nothing burger, but that's a whole different story. So, so there's an analyst, Gene Munster, right? Famous guy who used to be at Piper, now runs some money. He said that, Jensen Huang, who is the CEO of NVIDIA, on the conference call said the need for more compute heavily, 100 times greater need for a compute. That's the word he used, 100 times greater than the one-shot prompt. So basically, he's saying, it's going to take a lot more compute to get this stuff done in the future, right? So what I did is I used our formulas of hedges, edges, asymmetric risk, et cetera. And I came up with a couple ideas, right? So one was, potential hedges. So that included rare earth metals, right? So I took a look at rare earth metals, and I'm like, God, these charts look like crap, using Matt's word. And then, but it also made me think, God, now you know why Trump's going after all these, metals, et cetera, China, et cetera, et cetera. So it's a multifaceted thing. Number one. All right, let me keep moving. All right. Number two, then we talked about, another, asymmetric bets. So this would be, heads I win, tails I win. And the one of the mentions here was data center REITs, Equinix, right? Big data center REIT. I thought the chart
DLR also.
Okay, maybe you could pull those up, but I thought the charts didn't look that great, right? And so then, I went into energy storage, which is another idea here. Energy storage, AES, FLNC, all those charts look, pretty crappy, right? Then they started talking, another idea was fiber optics. So now with all this new compute power going through, you're going to need, higher, better fiber optic cable. So I pulled up a chart of GLW, right, which is the old school Corning, right?
Yep.
Trades at 20 times earnings. Going to be a huge winner here. I think that chart looks pretty good. I don't know, maybe not. I don't know. That's what I think it looks good.
Yeah, I mean, it's an undercut and rally at the 50-day.
So that would be one idea that I would consider. This is kind of like maybe a picks and axes play on, the need for 1,000 times or 100 times more compute. The second one would be an idea in programmable photonics, right? Photonics replaces electrical circuits and AI chips, makes everything run faster, blah, 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 blah. Symbols STM, ST Microelectronics.
Yep,
right?
I know it.
This chart looked pretty good to me. You're the chart guys, but to me, maybe that changed. It changed
not so much.
Less good.
It's my
Okay.
job.
Okay. All right. Well, yeah. All right. So tell me about that one, Jeremy. What do you think about this? That bad? I heard both of you guys like throwing up over there. So
No. And so hold on. So you're thinking the right way because NVIDIA makes the GPUs that all this stuff we're trying to do, with AI, robotics, all of it doesn't happen without NVIDIA's chip. They've got the monopoly right now. AMD is, way, way, way behind. But NVIDIA's chip doesn't work in a vacuum. You need all the stuff you said. So one of the things that I teach is, looking at, all right, who's the obvious? NVIDIA. But what do NVIDIA chips need? You need the data centers. You need the power. You need the cooling. You need the stuff to make the chips, on and on and on and on. And then what do those companies need? The problem and why those charts look like crap is first the DeepSeek news made it seem like, hey, we don't need those things. And then the Microsoft rumor of them pulling back on CapEx made it also seem like, hey, we don't need all those things. Plus everything just got, massively extended and it's got to come back. So Jeremy, your thoughts.
That's where the whenever you get an impulsive move in the market in any equity, and this is I always tell people to write this on a Post-it note and stick to the edge of their monitor, half and whole. And when you see an impulse move like that and it finds relative support somewhere, even if the chart looks crappy, oftentimes those big impulse moves give half back. So for short term, yeah, it's great. You can scalp the bounce and catch a dead cat and go back to half. So while the DeepSeek thing did beat down a bunch of stuff, most of those charts that got beat down by the DeepSeek situation gave back half. I mean, it was pretty easy to just throw a dart at any of them and hit one.
Both of these stocks are trading like way below Mag 7 valuations. Why I brought these to our attention. The third one is CIEN. Just pull that one up too, Sienna. Now this is like an old school name too, old school networker, but like Sienna's innovations significantly enhance data transmission capacity. So their networking equipment, is going to allow this 1,000 times more compute to blast through the channels a lot faster. What do you think of that chart? Good or bad?
Weekly looks like it should hold support here. Let me see here. I'm gonna grab a couple.
Yeah, I mean, yeah, I'm in the bad camp, but I'm also short-term bearish. So I don't know that I'd be going into any of these companies now. All the companies you mentioned are companies you want to own. I just don't know that you want to own these companies now. So, I mean, I think your thinking is right on. And, you name some of the stocks that, are on my watch list that I have owned. I don't think I own any of them at the moment, but, you got a lot of the big ones.
So you've been talking about in some of your newsletter or one newsletter this week about the valuation, what do you call it? Disparity, I guess. Some of these stocks are 40 times. Yours are the names that are like 20 times. That's the reason I brought them up.
Yeah, right. No, I mean, again, all good thinking. I'm worried about the environment right now.
Right. All right. And that's my 2 cents.
to finish, like CIEN, I mean, it's got a critical support area about $75. If that holds, maybe one more time we'll get a consolidation to like 85, somewhere in that neighborhood. But yeah, I mean, you got a point there. The chart doesn't look very appealing for an investor standpoint. Day trading it may get exciting in the next few weeks here, but for now, it's got a wait and see vibe to it. And a couple of the others you mentioned, I mean, yeah, they're beat down. They do, as the word goes, look like crap. But there's still some opportunities that'll eventually arise from there.
See,
we
like
always
something like Digital Realty, for example. I mean,
Yeah.
at its height was almost 200. It's come off almost 50 points. If that were to come back above the 200-day moving average, that would be something that would be interesting to me. In my mind, this stuff goes in cycles, and the breakout guys are buying it up here at 195, and I'm looking, all right, have it come back in, because I do think that we're going to need all these data centers, all this stuff. I don't believe that DeepSeek was done for $6 million, and CapEx is still crazy. Again, I don't like this environment. And again, a day like today where it's like, all right, they're going to rally this thing. Oh, no.
Right. Yeah, it doesn't look like an undercut and rally situation just yet.
No.
And it's kind of like that across the board. There's a lot of stuff it's very much the same way. I mean, it's in a not so great looking support area, and it's in kind of a wait and see format. So for swing traders, it's a very rough market right now. Obviously, there's still some, and you mentioned a couple of them in the heat strategy mailer this morning. One that I'm looking at is Salesforce. That hit right on support level that I had marked out a long time ago at about 294.50. And if it closes above that, I like the half back move on that one, but give it time. This is going to be, one of those markets where it's better to wait patiently for the next move than to just jump in. And to even paraphrase that, I mean, you got Warren Buffett talking about sitting on mostly cash right now, which is usually kind of an omen to most people who look at things the way he does. He's just waiting for some
Jeremy, I'm
water.
pretty sure on last week's webinar, Matt called you the next Warren Buffett, right, Matt? So
I did, probably.
That would be prestigious. I just need to build my working capital up a little bit more.
I think what I said is the only one who's got like a 95% accuracy rate.
Actually, you said better than Warren Buffett.
Gotcha.
Actually,
better than Warren Buffett. Yes. Yeah.
I mean,
Salesforce is one. Yeah, I'm not in it. When it broke the 50-day, I got out. But I mean, agentic AI,
right.
that is going to be huge, and they're a leader in that.
And it's a chart that the other part of it is, I mean, we've been all over CRM since day one, since we started beating on Kramer, and it's such an obvious chart to me. It's become a familiar friend. Like, you can just plot it out, watch your old levels get hit, watch them bounce, and it's just rinse and repeat, trade in, trade out. When you can start seeing
Salesforce or ServiceNow.
No, Salesforce. I changed it to ServiceNow because that chart I like better.
Oh, right.
Yeah,
I see.
That's where I was going next. But
that's why I wanted to give Jeremy the controls of the charts, right, Jeremy?
Either way, I don't mind at all. I can paraphrase your chart or my chart. Either way, to me, it's just data. I can analyze it. I love it.
All right. Yeah, gotcha.
But yeah, it's going to be an interesting market to wait and see for everything.
Yeah, I mean, ServiceNow is one name in that space where if I wasn't negative on the market, and this is one I would sell puts on because the calls would be way more premium than I'd want to pay. And I don't like, I mean, you could do a call spread, but I'm not a huge fan of that. I mean, I'd look at it, I suppose, if I could do like a, 945, 1175, if that made any sense whatsoever. Or I just look to sell a put, somewhere way down.
If we could get the volume on it, this would make another great 2x leveraged ETF right here.
It is possible. So I don't want to give away the secret sauce, but the SEC made a change yesterday, which is going to open up the floodgates for 2x.
Very cool.
So you are going to see another big filing from us.
I don't doubt that one bit.
Yeah, this is a completely different SEC, night and day. And not just crypto. So, they just approved something in the illiquid arena, private asset arena, that could end up being a game changer. So, yeah, I mean, I've kind of got my thinking hat on now of, all the stuff I wanted to do in the past but couldn't, trying to dust any of that off, because this is, I mean, enjoy it while it lasts. I don't know what's going to happen in 4 years, but
Right.
they're definitely making ETFs great again.
Yeah, definitely. That needs to go on a hat, sir. we gotta.
I will work on the make. Well, you've got make volatility great.
Yes. Make
I'll
volatility
work
great again.
on make ETFs great again, and then I like the Tuttle was right about everything.
That's a good one too.
Yeah, so we'll do that one also. All right. Anything else on now back below the 200-day, right? Yeah, it looks like it's going to have this battle all day between the 200-day and the 50-day. Again, I would just I would urge caution. The Mag 7. Apple just went below the 50-day. Trying to peek its head back above.
And Apple was doing pretty good for a while there, and it just sort of fell flat.
Yeah, I mean, Apple was the only one. I mean, because it gotten its butt kicked, which again to me argues for not buying a stock like when Apple's at 260, buying it when it's like at 220,
right.
And the cycle that things move in. But yeah,
I did a little piece about Apple on Tuesday when you were out. We're tag teaming that one, but I went solo and just kind of went over most of the Mag 7 stuff. And I think Apple at the time was the only one that was really doing good. But then I said some key words there I think that should resonate with everybody is that they announced that they're going to essentially put $500 billion towards developing U.S. production, and that's a key metric when you hear stuff like that. Where does that equity come from? Investors' pockets. That comes straight out of the company equity. So
Yep.
I mean, you're going to see some reaction to that. Yeah, you'll see some people chase it because that is great news. But whose exit liquidity did that just become? Long-term investors who are going to take this advantage of a pullback, and once that 500 billion's been allocated and things start to move, you'll see some flattening of the chart, some sort of reversal, and eventually be able to trade it back up. So it's the old adage of buy low, sell high, rinse, repeat. Everybody does it.
Yeah, I have a feeling that announcement was more for Trump than anything else, because now Trump can say, "Hey, look at this! I've got to win." But yeah, I mean, obviously, it was a couple of days ago, and the stock is lower, so it was not for the shareholders.
No, that was definitely a political move. At least to show some progress, I guess. But it's
oh, go ahead.
It's going to give us a lot of eventual opportunities, and most of the charts that I look at are like, I'm going to handle some of them with kid gloves from this point until things start to really make sense from a technical analysis point of view. And I think that's going to be the mode for probably going into probably mid-March here. We'll start to see some things start to straighten out. But I think it's going to take about that long for a lot of this stuff to digest. Just my, a general opinion from a technical analysis point of view.
Well, and also, and I don't know if you see it on your Discord. I mean, your Discord is probably different because your guys are getting really good advice. But I see it in Twitter and on some of the others. I mean, some guy, the other day tweeted out, yeah, I lost 250,000 just that day. And he's like, I'm grateful for the opportunity to be able to lose that much. And, and the other guy was like, oh, yeah, they're cool. And I'm like, in that same day, and I mean, I've got a decent sized portfolio. I lost 12,000. I was pissed.
Mm-hmm.
Like, man, what did I do wrong? And, it was probably like, 10 basis points or, whatever, but still, I mean, I hate lot. I mean, if I lost 250,000 in a day, and I think there are a lot, I mean, you look through I've got like 4 Discords up. You look through it, these guys are just getting savage because, they just buy, all these shit goes all the way up. They've got no risk control. And I mean, that doesn't get flushed out in a day. It takes a while, and all that stuff is going to go right back up again. And it's just going to be rinse, repeat. And the guys who know how to manage risk, know how to buy stuff when it's low and trim when it gets up there and then sell when it starts to break down. I mean, those are the guys who are going to do well. And the guys who lose 250,000 in a day, that's not the last day they're going to lose 250,000.
Yeah, it's gonna suck. And for me, like I started with basically nothing when I started trading, and I've slowly built it to where I am now. So for me, it's job one is protect capital at all cost. So on a day where I'm starting to see some significant losses in my portfolio, I'm going to make some changes. And I'm going to, if I see things continue to slide, I'm going to be telling myself, stop what you're doing, fix it now, or you're going to be set back so far to try and slowly snowball this back together. It's not going to really be something that stops me from trading, but it's going to be something that's disheartening. It's going to affect the way I trade from that point. So, I mean, if I were to lose 250K in a day, I would be beyond pissed. I would probably give up for a few months until I figured things out, because I know I would have made a big mistake to lose something like that.
And no matter what your portfolio size is, unless it's like 10 billion,
right,
that's too much money to be losing, and to me, risk is paramount unless you've got like, 10, 20, $30,000 and, you're trying to grow it. You've got to be, again, going back to always have hedges.
Right.
It sucks in an up market, but I mean, through this whole downturn, it's helped immensely. And unfortunately, I think it may continue to help immensely.
I mean, yesterday was like, a bit of a point where it would be a little concerning to most people, for me in my TNA position, for instance. But my running overall total cost basis on that is currently $17.78 a share. So, I mean, unless it starts approaching those levels, still plenty fine. My current position cost basis on recent assignments and stuff like that, that's a little bit underwater. It's at $42.92. It's way up there. So all I can do is let it skim along the bottom and keep pushing premium until I'm at a level where I'm break even again. Eventually I'll be ahead of that. But overall, it's not, I'm not going to write that off as a loss, because this is not something that I'm looking at in the immediate. I'm looking at years down the road. I want to wheel trade this thing forever until the wheels fall off. So, and similar with my newer position in NVDX. I mean, that's done phenomenal, and then I'm on. I started that back. Let's see here. January 27th was the first wheel trade entry I made on that thing. Current cost basis is down to $9.64 a share. So I mean,
so far so good.
Doing great, and I plan on owning that for years and years down the road. And the premium on outlay on that is huge for me. I mean, it's damn near 20% a month, and that's not even trying. So that's where I look. I look for things. Well, where's my alpha? If I can trade a chart that moves and sell premium on it, that's better than any hedge, because it's something that's always earning. It's never given up. So it'll take a while to get to that level, and a guy who goes out on Twitter and announces a loss of 250K like that and just gets smoked in one day, that's rough, man. I could do a lot with that 250 in my portfolio. I could actually, sit there and naturally turn 20% a month on it, just sticking it in NVDX and doing what I do with it,
Yep.
So when I hear numbers like that, it does give you the cringe, but it's like you got to know that are these guys ever going to be interested in learning something like that?
And there's a lot of it out there. I mean, I love social media. I love FinTwit. You need to be careful, how you're using it. There are a lot of gurus out there, and a lot of guys are going to tell you, hey, this is what I'm buying, this is what I'm selling. There are honest ones, and then there are the guys who never have a loss.
Yeah.
But take it with a grain of salt. I mean, I use it. The reason I have 4 Discords up and I'm looking at Twitter is I can't watch everything. I mean, I can these days I can hardly watch anything. So that's my charts. Someone hey, XYZ is moving. Oh wow, that's a stock I'm interested in. Let me take a look at it. Or a stock that I hadn't heard of. Now I'm not going to just buy it. I'm going to my process now. I use ChatGPT to do my research for me. Then I'm looking at the chart. I want it to line up thematically. If it's in a theme that I think is interesting, then I'll look at the chart. I'm just not going to blindly follow some guru. And but these guys a lot of times are just dumping a ton of money into these stocks, and they're riding it up and then they're riding it down.
Yeah, they fail to trim. They fail to take profit.
Can I add something here?
Please? Yeah.
All right. So I am on Twitter quite a bit. I follow this guy called Tesla Economics, right? And he said this thing yesterday. If you're a true long-term Tesla investor and you believed in it when the stock was over 400, then you should even be more excited at 300. If there's 200, that is like walking into your favorite store and seeing everything on sale. Generational companies just go on sale, blah, 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 blah. Do your homework. You keep buying on the dip, right? What do you guys make of that comment? I mean, I feel like you guys are kind of getting lost in the weeds on this a little bit. I mean, you're basically saying the stocks aren't really doing anything, so let's not do anything. But
So for Tesla, I was gonna say I was pretty much completely trimmed when it nailed my measured move target. Gosh, back in December at 435, I was done with it for now. And I'm looking at it now and going, well, it's got downside risk to like 245 or so, and this next gap down on the daily chart stands out like a sore thumb. But if it holds here, it can certainly bounce for a reversion to 360. So I look at it just purely in a technical standpoint. If it's got opportunity for me to take a trade, I'll take it. But if not, I can sit and wait. I'll pull a sit on cash until it starts getting old.
I mean, but as a contrarian, to me, when someone says this, it's like, oh God, I'm going to keep buying this forever. You could double down to zero if you wanted to. Honestly.
You gotta be careful on Tesla. Tesla is one of those names where you've got haters who will always hate it, always tell you to sell it, and lovers who are always going to tell you to buy it. And you've got to scream that noise out. You've got to have your own process. So for me, I think Tesla is a potential core holding because, if Tesla was just a car company, I'm not interested. I think Tesla is an AI company. It's a robotics company. It's a lot of different things. It checks a lot of different boxes. But then I go and I look at the chart. And, you know, I've trimmed most of my Tesla exposure.
I can see that, right?
Well, right. But I mean, you know, this is something where, you know, again, it depends on your process.
Some of those red candles were your exit liquidity.
What's that?
Some of those red candles were your exit liquidity.
Exactly.
They say don't catch a falling safe, right? Or catch a falling knife. I mean, isn't this one of those?
Well, yes and no. So I think you do catch a falling knife when it stops falling.
Yes.
So, you know, for me, my favorite chart pattern is undercut and rally, either at a key low or a key area. So if this moved back below the 200-day and then moved back above it, I love that chart pattern. And I would either, you know, buy calls on Tesla, buy calls on Tesla T, or I would sell puts, you know, somewhere, you know, maybe in the 200 area, you know, depending on, because again, the stock, but what do I think of the overall market? Like if I were doing it today, because I think the overall market sucks, I'd probably just sell Tesla puts at, you know, 200 and say worst case scenario, you know, it's at 286. I own it at 200. Oh, well.
Right.
If I like the market, then, you know, there's a lot of space between where it is now and the 50-day. You know, that.
Jeremy, what's the worst case on this one?
For the short term, I can still see that
3-4 months
standing out to me. I wanted to kind of touch on something that you hit there, and I'll finish it with a standing rule that I've had since day one of my journey into trading is never, ever average down unless there's some way I can make money averaging down. That's why I learned to sell puts. So if you were looking at, you know, selling a 200 strike, for instance, that's right at the like worst case scenario support level that I can see. Well, within reason, it's right around 215 for me, but yeah, 200 is definitely possible. And that the thing about Tesla options is they have insane amounts of premium, even that far out of the money. So yeah, it'd be worthwhile. Get paid to sit there and wait.
In a worse, most people have the stomach though to be shorting puts or shorting calls. I mean, you know,
no,
like, most people can't really sleep at night as it is. Why do they need this headache? You know,
they don't understand it. That's the hard part. Is that sell to open options is it's like speaking Greek to someone who's, you know, flat out straight Americanese.
Which is fine, by the way. If you don't know what you're doing, stay away from that, you know, entirely, because, you know, those are the types of trades where something can go horribly wrong. And if something can go horribly wrong, it probably will.
Absolutely. Not to say it wouldn't be worth learning a little bit about. And that's the
totally.
That's the thing that people.
I've got a couple of other points I want to make, right? I read something about the Mag 7, right? And I was using our, you know, philosophy of hedges, edges, asymmetric risk, and themes, right? So edges, psychological. So the one edge for the Mag 7, investors are psychologically anchored to these stocks due to past performance. FOMO, buy the dip, you know, first order thinking, these stocks are dominant, so hold them, buy them. So to me, the strongest thing these guys have going for them is FOMO, which is fear of missing out, right? And maybe that, to me, that's like the only thing in my opinion.
So there's more to it. So the S&P 500 and the NASDAQ 100 are market cap weighted indices. So as money flows into them, which it does all the time, people dollar cost averaging, 401ks, zero DTE options, market makers hedging. There's so much money going into the NASDAQ 100 and the S&P 500 that it's going mostly into these stocks, which makes them bigger, which makes it a bigger part of the index. That's number one. Number two, when you look at the world thematically, like I do, you look at all the dominant themes and start saying, all right, who are the obvious winners? And it's one or more of the Magnificent Seven. And, if they want to dominate an industry, so, for example, Amazon came out and announced that they were doing some sort of quantum chip today. And everyone was talking about, let's buy the quantum companies. And I think, who knows? Yeah, so quantum companies are getting their ass kicked. Why? Because if Amazon wants to dominate the quantum industry, what the heck is, IONQ going to do, or Rigetti? Yeah, I mean, what's left for those companies? So, if we're looking for structural edges, to me, that's where the edges are in the Mag 7.
Well, I don't get it. I don't follow it. So please, so Rigetti, how does this relate to what I just said about, the
because
FOMO?
Rigetti and IONQ are quantum companies. So if Amazon is making a breakthrough in quantum, you might think the quantum companies are going to rally. Quantum companies are selling off. Now, part of that is risk off, obviously, but the other part could very well be if Amazon decides it wants to dominate quantum computing, or Google, which is also in it, or Microsoft, which is also in it. I mean, how can a company like Rigetti or IONQ compete? And the answer is they can't.
Got it. I understand.
So they are running monopolies, but so why does a Tim Cook announce spending $500 billion on U.S. jobs? Because now, all right, well, we're not going to go after you for a monopoly, but technically, if you look at the definition of monopoly and you look at the Magnificent Seven, I think you could make an argument that all those companies have monopolies. And, so why are all these CEOs? I mean, Elon Musk is different because, I mean, he came out for Trump before Trump won. But, now that Trump won, I mean, why are all these CEOs kissing up to him? They're not stupid.
Yep.
Right.
Good point. Even Zuckerberg's sucking up. You get into a lot of details on that. That can be a big rabbit hole. But the fundamental thing is that you look at these companies, and they did buy everything on the board, but the railroads. They bought all the destinations, and there's one thing that happens is in the game of Monopoly, there's always one huge winner and a whole bunch of really bad losers. So being in a Mag 7 dance, those aren't written in stone. I mean, they're the dominant companies, but they're not going to necessarily stay, all of them are going to, not necessarily stay in the Mag 7 structure. There could be another company in the midst that would just kick one of them off and replace them. So, I mean, can you do that with like an NVIDIA? Probably not. But can you do it with an AMD? Yeah, you can. So, eventually something's going to step off and something will fill the void. So that's why we love to look for themes, is because we can usually find something that is likely to fill that void should something like that happen.
Howard came back today and said, even today, Axon said the biggest concern for 2025 was industry giants dominating data centers. They can't compete with that type of investment. Going back to what Matt just said.
Yeah.
So let's move on to Bitcoin here. Yeah.
Yeah.
Okay.
Bitcoin.
So Bitcoin, that's a beautiful looking chart.
No, that's Axon. That's not Bitcoin.
No, I
Hold
know.
on.
Yeah, that's Axon.
I already knew what was coming.
Bitcoin. All right.
So if you turn that one upside down, it looks good though, right, Jeremy?
Yeah, it's a big old rounding bottom if it's upside down. We were looking at this last week, and for a short term, day trader's perspective, for the past 3 weeks straight, I had a 92 target on that for a while, and it smoked it the other day. Now we're looking at just simple measured move blocks, and half a move is where we're sitting now, about 84.5. A full move's down to like 76.5, and that's scary because, I mean, people are saying, dollars figures of stuff wiped out from, the market in general. And then you look at Bitcoin and it's just kind of following suit here. And media will use words like, all these profits are erased. No, man, they were capitalized. This is natural. So when we look at Bitcoin, eventually someone had to sell. And I've been looking at this topping pattern for a while, and it kind of made sense where the support level was at about 92K. And that's, if you look at a daily chart and zoom out enough, you'll see it's just one big diamond top. You have a big broadening pattern leading into a big compression pattern, and it note for note matched everything it did on the left half to the right half, and now it broke support. And then look left, go back into times of like 11 of 2024 is about where we're at now for range bars. And that trend leading up to that point is still pretty steep, all the way down to 68. So yeah, Bitcoin can be capitalized for a while. Would I buy it here?
It's going lower is what you're saying. No, or you think it's bouncing? I'm lost.
I think it's going to visit some previous levels and, eventually find some liquidity. You'll find some buyers in there somewhere. But for the meantime, I think, generally it's still bearish. And over time, it will find one of these levels where it'll give you a bounce and it'll give you opportunities to scalp it. So the words I use are be nimble. Yes, you can go and catch some retracement trades and scalp the bull side on this if you're a buy only guy. Absolutely, you can scalp the little rebounds in this trend. But if you look at the daily chart, it tells you the trend is generally bearish. So be ready to get the heck out of the way quick if you're going to scalp long. And that's what I mean when I say be nimble, because eventually we'll find a point where it will bounce and you'll find some liquidity, you'll find some buyers, or generally it's old money who's short covering. Usually there's not a bunch of new money in there unless they're chasing it. You'll be able to scalp the chart. It'll give you opportunity to capture some of those little bullish rebounds off of all the little half back steps that it's going to make, very likely. And eventually when it hits the floor, you'll have made enough cash catching those little pops that now you can compound a position. That's what I love about stuff like Bitcoin is you can compound it. It's got enough range of movement where you can just sit there and scalp it until it's in a trend, and then you can add as you go.
What do you think, Matt? I'm curious.
Yeah, so going back to themes, a lot of stuff going on here. So Peter Schiff, who's a gold guy and been a gold guy for years and years and years and is wrong quite a bit, tweeted the other day, Bitcoin's finally collapsing. Trump was supposed to make Bitcoin great, total failure. I mean, it's up 10,000 points since the election pop. Going back to looking at one other thing. I also see tweets from time to time, Bitcoin's going down. Look, BlackRock, Fidelity, and ARK are all selling. What people don't understand is BlackRock, Fidelity, and ARK manage spot Bitcoin ETFs. They're not trading Bitcoin. So right. If investors are selling and redeeming, they have to. So Larry Fink isn't sitting there saying, holy crap, I don't like Bitcoin anymore, I'm selling. If Michael Saylor was selling, the MicroStrategy CEO, that I would pay attention to.
Strategy. But,
what's that? Strategy.
Strategy, right? Come on.
Yeah, I mean, Meta's Facebook, X's Twitter, MicroStrategy's MicroStrategy. I'm old school. Going back to themes, what I talked about the SEC. Anything in crypto, it sounds like they're game for, which means we're going to have more and more products on crypto. The marketplace is going to expand. We have a crypto president. We've got a crypto czar. We've got more and more companies talking about crypto, putting crypto on their balance sheet. Now, is it going to be a smooth line up because of all those things? No. And you're seeing it, if you are a buy and holder, should you have a crypto allocation? I think you should. Size it based on your taste. 1, 2, 3, 4, 5%, whatever it is. I'm looking for a spot, and we'll see whether it holds support on this 200-day. It's something, I am not a long-term buy and holder, but it's something that, I do want to get back into because also, Trump's got 3 years and 11 months left.
Right.
So this is an area I think you want to be in. Yeah, right now it's tough along with everything else. People, it's an inflation protection. No, not really. It's a risk on, risk off asset, just like a lot of different things. And right now we're in a risk off environment, so I would be careful.
I want to ask a question. So you answered some of the things I was going to say, but I talked about institutional adoption here, and I wrote this down. So spot Bitcoin ETFs, obviously they're growing or have grown. Sovereign wealth fund interest, corporate treasury allocations. Do you buy that? I don't know. I guess it's going to happen, but what are your thoughts on that? You just sit it. Just seems like, that's like the last thing.
So I think it's going to depend on MicroStrategy, because when MicroStrategy is trading at multiples to their Bitcoin holdings, and Michael Saylor, who's the CEO, is a billionaire, whatever times over, if I'm a CEO, I'm looking at that. And hey, if I put Bitcoin on my balance sheet, does that expand my multiple, which brings my share price up, which, brings up my net worth? It's something I got to consider.
How about governments? How about the Fed?
Same thing. Again, what the hell's the cryptos are, I don't know. But you don't name someone a cryptos are unless you're planning on doing something very serious in crypto. So I would assume at some point we will get, a national crypto reserve. And I think, the cool thing about governments and corporate treasuries is they're probably not going to have their finger on the sell button like, a lot of other people would. And, and to me, more players in the market just makes for a more efficient market. Because right now, it's not the most efficient market.
No, participation's been kind of crummy, and it's very. It's a very inefficient market. And I was looking at something last week.
So Matt, are you a buyer here or a seller? I don't really.
I'm neither at the moment. I want to see how it acts around the 200-day.
So I'm going to ask you guys a question. So we've had this conversation now for 45 minutes. I don't think I've gotten a clear buy or sell from either of you guys. So is there anything you guys really like here, or is the selling?
Again, I'll go back to what I said before. I would be very, very careful here. I would have.
Okay.
I would have. Yeah. You can be long names you like, but I would have hedges. My list that I own is the smallest it's been in a while. My hedges are the biggest they've been in a while. And, when I am buying something, I'm typically either doing a cash secured put, or if I'm buying the calls, I'm buying a quarter of my normal position size.
So what asset class is your best hedge? If let's say you can't be short, when you have to go long something for cash, what would you buy?
I would push back on you not being able to be short. If you can do options, you could buy puts on ARK.
I got it. Okay, yeah. So let's move on to the next thing we were going to discuss, TLT, which is Treasury 10-year. Is it TLT is the 10-year?
No, TLT is the 20 plus.
20 year. Yeah.
The 20 plus. Okay. So, I have some thoughts on this, but I want to hear what you guys have to say.
So I was talking to a Politico reporter yesterday. And, we're doing a 2X DJT, which is Trump media and technology. And he asked me, besides DJT, what's a Trump trade these days? And I thought about it. I'm like, I don't know. Going into, after November, I could have given you a list. Those names aren't Trump trades anymore. And then it hit me. It's TLT. The one thing we know is Trump wants lower interest rates. And, and we've seen that, TLT stalling today. I've got cash secured puts on TLT that, they're at 85 and 86, figuring, something bad would have to happen. And God, worst case, I own TLT at 85, 86, and I write calls against it. But I think this is the only obvious Trump trade right now. Is I don't think the Fed can raise interest rates. I mean, does Jay Powell want, that shitstorm? And, whether they're going to lower or not, I don't know. But, this is my favorite long at the moment.
Wow.
I can agree. And back in about towards the end of January, Sig, another one of the moderators at Bullish Bear, and I, and this guy, he's on a level with options. Like I always say, he's probably forgotten more about options than I'll ever know. He's that kind of guy. He's an absolute options geek. But him and I were talking about TLT, and back in January, and we briefed on it in December. We noticed that descending channel was pretty ominous, and that a change of regime would kind of be a good catalyst to kick it off through angular resistance there. And then we kind of agreed on a reversion target that we were able to plot out right about $94.40, which is about half of that trend back, just above that previous high in that channel. And the space of time between about mid-January and mid-December to about the end of January there, we defined a nice clean reversal, and it was confirmed right around January 20th of all things. And things started to pick up some momentum there. Yes, it did have some range within that point and that angular resistance area we pointed out, but it gave opportunities to get long. And certainly it's playing out pretty well now that it's well above that angular resistance, and it's just going to probably cook right onto that reversion target pretty easily.
So okay, Jeremy, I mean, speak to me in English here. So is this you think it's going back up to 94, 95, that area? Is that what you're saying?
That's a good reversion target over the next few months here.
Really?
Okay. Yeah, I mean that's next resistance, assuming it can break back through the 200-day.
As long as it stays above the 200-day, I think it's got a pretty good shot at hitting that reversion target.
So, I mean, there's a lot that you could unpack in this, right? But wow.
If you really want to be a little bit, have an easier point of view on this from a chart for someone who's not as keen on technical analysis.
Yeah.
Blow up a weekly chart and zoom way out to include all the way back to 2022, and you'll see what I'm looking at. It makes a lot more sense to find that reversion target then. It's you would have to zoom way out.
Yeah.
So, I mean, I on the podcast last week, Jeremy, I don't know if you watched it or not, but I said something about inflation being a lot higher than the standard 4% or whatever they're throwing out there these days. So
yeah,
I just saw the statistic here, and I just printed it from the Senate Joint Economic Committee. Estimates how much each month the average household spends more. So it started from January 21 to December 2024. The U.S. household average has spent $1,117 more per month than they did 3 years ago, right?
Yep.
So, I mean, it's just twofold. So is this either this is saying, right, people are spending, I mean, if you're saying the average person makes 60 grand a year, which would be 5 grand a month, people are using 20% more a month now with their net income, or not even net income, their gross income to pay their expenses. So, I mean, I would argue that therefore either we're going into a horrific recession because costs are so out of control, or we have this freakish inflation, or is that stagflation? I don't know. Maybe there's so many levers here. Then you have the Doge cuts. You have China dumping the bonds. There just seems to be so many things in this trade.
Pat, we're at an hour. Let's save that for next week. And and I bet Francis will have a thought on that. I mean, my thought on that is we've got a two-tiered economy between the haves and the have-nots. The haves are fine. The have-nots are getting progressively more screwed. And why it doesn't get talked about is the people in the media are the haves, and they're sitting there saying, hey, everything's great. What are you guys complaining about? But meanwhile, the average person is having to spend more and more and more. The question that I don't know the answer to is, can that persist? What's that?
By lowering interest rates to -5%?
No. I mean, can the have-nots?
That's the plan. Huh?
Can the have-nots continue to be in worse and worse shape and not have it ultimately affect the haves, which it did in 2008, where everybody got caught up in that. Does that happen again? Don't know. There is a reason why I tell people you always have hedges, because who knows?
There's a lot pointing that way, and a lot of rabbit hole to go through to get there. But you're absolutely right. It's going to be, are we going to approach
many rabbit holes in this trade? I think.
Yeah. And are we going to approach 2008 levels again? And I don't think it's going to happen in the same way, but a lot of levers are being pulled to where it's almost inevitable at this point to happen in a similar effect. So something's going to snap here eventually, and I think that a lot of the market conditions of let's wait and see are eminent in the charts as well. Everything kind of speaks to the same thing.
Yeah, it's funny you say that. I was thinking the same thing.
Something's on the horizon, and
I feel that way too.
Getting to a point where something's going to snap. And if we want to go into a little overtime, I got a little piece that I can kind of reiterate that I talked about.
Go ahead.
The idea is that the housing market is also in serious trouble at 7.5% interest rate. The average consumer cannot touch a house right now, and inventories are stacking up. Builders have stopped in many places. Where's that going to go? Well, no one's got any disposable income anymore to add to a staggering mortgage payment, right? No one's going to be able to put down like $2,600 a month in a mortgage for a starter home. One side of this is a dead end, and something's got to give. Something's got to snap the housing market. The other side of this is that you've got a president now making moves to possibly do so to end federal income tax. Now you got something to think about.
Or property tax.
How much of the average consumer's money goes into paying taxes when it comes to income taxes? It's about like the first 2 to 3 months of working, you pay the government, and then you pay yourself later. So imagine if suddenly that much becomes disposable income to help people buy houses. That's what happens if the Fed ends, and we can sustain the 7.5% interest rate, and people will be able to scrape enough together to get their starter home, even at these rates and even at these inflated prices. That's kind of a lever that I can see is there. I don't know if it's really been handled yet, but it's something that can happen. And that's just one of many possibilities that the market's kind of waiting to see what happens here.
Yeah, well, Matt's moving to Nebraska. He's selling the place in Greenwich, and he's moving to Nebraska to save a little bit on his mortgage payment. I'm sure he's on that real soon.
Not a huge fan, but I mean, my kids are eventually all going to be in New York City, so I don't think I'm going anywhere.
There you go. Yeah, my kids are looking at like pre-med school in VCU, so
Where do you live, Jeremy? I don't even know. I wish.
Central Virginia, just Richmond suburbs.
Oh, I love Virginia. I wish I would have known.
Be careful, Pat is going to dox you now.
Oh no, I'm doomed.
All right, guys.
I'll buy a house down the street and rent it to you.
No, I love Virginia. It's so beautiful there. I really like it quite a
It
bit.
is.
All
I
right.
do
See you guys.
All
Have
right.
a good
So
weekend.
yeah, let's end it here. We'll be back. We'll be back next week. Thanks,
All right.
guys.
See you guys.
Okay.
Bye.
Thanks again.